Welcome again to my channel. Today I am Oya Benjamin and this is Zander FST. If you are looking for a strategy that will help you make profit from this market, then this video is for you. Stay put as I will be showing you this simple strategy that requires no technical analysis, that requires no smart money concept, that requires no indicator configuration. A simple strategy that is easy to use. Just one or two settings and the strategy is ready to go. And once you have this strategy, apply the strategy and I bet you'll be smashing the market every time. Now let's go in as I show you this strategy. This strategy is called intraday double bottom and double top. Now it looks similar to the double bottom and the double top strategy that we have been trading. The only difference is that the peak that forms the double bottom or the double top must occur within 2 trading days. Okay, now once the two peak that form either the double bottom or the double top occurs within 2 trading days, now it becomes a valid setting for us to use in entering the trade. Now let's look at the chart and as we see how this strategy plays out. Now the first thing you do is to turn on your period separator so that you will be able to know when the 1 is in section and the opening of the 2, because we are going to be making use of the days, because this is a trading that has to do with 2 days. Okay, now concerning this trading strategy, it works across all time frame, yes, but I prefer using the 1 hour to trade this particular strategy. Okay, now let's look at this particular strategy. You simply identify the 2 peak that form the double top or the double bottom, and these 2 peak must fall within the 2 different trading days. Okay, once you have spotted the 2 peak on day 1 and on day 2, your entry must be on the neckline. It's very important in this concept. Please, your risk to reward ratio must not exceed 1:2. That is the one that is assured. Sometimes it can exceed 1:3, but to be on a safe side, you should use 1:2. Okay, risk to reward ratio. Now looking at this, I have identified the 2 peak. This is peak 1 on day 1 and this is peak 2 on day 2. So this is a valid setup for this strategy. Now what do? I place my entry on the neckline, okay, and my stop loss, at least I should be targeting 1:2 risk to reward ratio. I prefer to lose $10 per every trade and gain $20. So what do? I put my entry here and my stop loss. You look at it from here to here. You notice that what the 1:2 was smashed. Now let's look for other ones. There are many. The occurrence of these are many every day. Now this is the everyday occurrence. We'll see it every day. Now look at this one again. This is a double bottom of it. Now this is peak 1. Now this is a double bottom. This is my peak 1 on day 1. Now this is peak 2 on day 2, and this here happens to be, this is my neckline. Are you getting it now? So if I place my trade on the neckline, look at it and put my 1:2. You look at it, it was smashed at this point and the market kept on moving. You see, for those that are into long trading, they can hold this market as long as they want, as long as there is no reversal sign that they see. But for me, I pick my 1:2, and once I'm 1:2, I go out of the market. Remember, it must happen between day 1 and day 2. That is the setup. That is when it becomes a valid setup. If it does not happen between 1 and day 2, it's not a valid setup. Now look at this one again. This is the first peak on day 1. Now this is my second peak on day 2, and this one here happens to be, this one is my neckline. This happens to be my neckline. Sorry. Now this happens to be my neckline. You see, the market was smashed. The 1:2 was smashed. Now let's look for another. It happens every day. Every day, guys. Check this thing. Go through it on your chart. Check it over and over. Apply this this strategy, and I bet you will smash the market. Now look at it again. Look at peak 1. Now look at the peak 2. Now this is a double bottom. Now this is the neckline. Look at the neckline here. Okay, I put my entry on the neckline and 1:2. Look at it here. The market was smashed. And for those that like trading synthetic, this strategy can also be applied on synthetic. Now let's go back to synthetic and see if this strategy works fine on synthetic. Now, this is volatility 75. I like trading volatility 75 because it has a lower volatility. Okay, now let's look at and see if the pattern plays out perfectly on synthetic indices. Okay, now I pick my block. Okay, now this is it. This is my first pick on day 1, and this is my second pick on day 2, and this happens to be my neckline. I enter my trade on the neckline. You see, I smashed the market. Now let's move again. Now look at it. My day 1, my first pick on day 1. Now this is my second pick on day 2, and this is my neckline. I enter the trade on my neckline, and the market is smashed. Remember, the double bottom or the double top must form between day 1 and day 2 before it becomes a valid setup. Okay, so this is something that happens every time. Look at it again. Now this is pick 1 on day 1, and this is pick 2 on day 2, and this happens to be the neckline. I enter, I smash mine. So guys, this is something that I've tested over and over, and I'm still trading with it. Why? Applying other concept, I use it for my quick cash out and smashing the market. So you can as well test run it in your chart, apply it in your chart, and let's make this money together. See you in my next video. But before you go, don't forget to subscribe to the channel, like this video, share this video to benefit others. Above all, turn on the notification bell so that when I post my next video, you'll be notified. Have a successful trading week ahead. Bye.